Can you invest in Tata Dividend Yield Fund? One more NFO, one more explanation, so one more video. So hi, hello, this is Ganesh Santuru, your stock market profit coach, and I help in multiplying your money by investing in stock market. And today's topic is all about Tata Dividend Yield Fund NFO. So this is my book, One Page Stock Market Plan. If you like to learn more about stock market, go and purchase it in Amazon. It's a Kindle version of it. Okay, you can read it only in a Kindle book. Okay, and today's topic is a Tata Dividend Yield Fund. And if you are someone who is looking out for new NFO, and yes, Tata has launched a new one, and this one is very special because it's not equity, it's not new for fund of fund, because many new companies are launching fund of fund, meaning you invest in like a particular mutual fund and they invest in foreign funds. So this fund is something like investing in dividends, meaning dividend yielding strategy. So some of the most of the mutual funds, most of the equities, direct companies which is listed in stock market, they give dividends. Excess profit is given in the form of dividends. So all these excess profits, so if you can find some set of companies which is giving dividends regularly, and if you are able to invest in those companies at lower levels, every year you will be for sure getting dividends. Okay, and a couple of years ago, most of the Tata Balanced Advantage, or even most of the HDFC Balanced Advantage, they used to sell that particular mutual fund, saying that opt for dividend strategy so that you will be getting dividend regularly every month, because every month dividends used to be around, every year if it is around 7%, it will be just divided by 7 to 10%. It varies based on the equity market. So they used to sell this balanced advantage fund, and right now the fund has come down. So that is totally different, which is based on the dividends provided by companies, and it will come down. This mutual fund is particularly that they are going to invest in companies. The strategy itself is they are going to invest in companies which are going to generate dividends alone every year. If the dividends are more, they'll be having that kind of fund. That is the first one. And the second strategy is investing in contra. For example, currently the out of favor market, because there are let's say there are 30 sectors, there will be like 4 to 5 sectors that will drive the market, and remaining another 4 to 5 sectors at the bottom of the rung, which will bring down the market. The entire sector will come down. So these mutual fund, what they are going to do, they are going to go contra. They'll be invest in a sector which is pulling down the market, so that overall, when the market is changing, when the economic cycle is changing, automatically from the bottom of the rung it will slowly start to come up, so you will benefit by capital appreciation. So that is a second strategy. Okay, the third strategy is investing in investment trust as well as real estate investment trust. So it means any power finance companies launched, I think Indie Trust, Power Finance Trust launched NCD kind of stuff based on fixed returns. They were accumulating money. That is the first one in India. And another one is real estate investment trust, slowly catching up in India also. So this mutual fund is going to invest in this something new, and almost all these are fixed instruments. Three strategies are there. First strategy is investing in dividend yielding investments, dividend yielding investing companies. Okay, for sure they'll be giving dividends. And the second strategy is the contra approach for capital appreciation, I believe. And the third one is all about investing in investment trust as well as real estate investment. Real estate investment trust means all the real estate land parcels that, with the big companies, or all the bigger things. So they will be investing, they will be investing in real estate investments, and this mutual fund will be investing in those companies, as well as I said, the power grid investments. They launched a NCD kind of investment trust, so they will be mobilizing money, they will be giving out returns as a fixed sum. So which is again a fixed sum, similar to the dividend yielding company investments. This InvIT or ReIT is also going to give complete returns over a period of every year. And on top of it, capital appreciation may come in the form of contra approach. So this fund is maybe for somebody who wants to, who are conservative and ready to take a bit of risk associated with it, so that you're getting some extra returns. This is something already certain mutual funds are having this, and now Tata Dividend Yield Fund has launched it, and the fund closes on 17th May. And if you are interested, you can go and buy this fund either as lump sum or SIP. If you ask me, invest only a portion of your investments planning into this fund, so that you're not going to miss a huge thing just because you're investing in it, or if you're missing in it because it's not a great it's one another fund based on the current market condition. They want to take use of the current condition, so that is the only thing when it comes to this fund also. So it's not something new, or it doesn't have anything interesting if you ask me. And just to make sure they are making advantage of the current market condition. So whenever the bull market condition is going up, and there will be new funds which will be getting launched, and this is again one such strategy to have new fund, and they want to mobilize money. That is one thing. Let me see what are the other companies which has launched in this Tata Dividend Yield Fund. One such thing as UTI Dividend Yield Fund, which is in the market for a very long time, more than 10 years. Principal Dividend Yield Fund is there in the market for a very long time, and Aditya Birla Sun Life Dividend Yield Fund is also in the market. So on an average, you'll be getting around 7 to 10%. This is for people, and HDFC is in the market for close to a year now, and not even a year. I think 3 to 4 months. I think for 3 to 5 months. I think not more than three, four, five, six, not more than six companies are there in the market in this category. So it says that Tata Dividend Yield Fund is almost like nothing new. It is already in the market by other companies. So they also want to catch up, do the catch up game, and launch a new fund offer. So that is the strategy. So if the returns will be in the range of 7 to 10% in the long run. In the short run, don't expect much bigger returns. And if equity market is going high, this fund is not going to perform in a much bigger way. So the best choice will be to expect lesser returns but consistent returns, because dividends are going to be consistent. So the returns from this fund also will be consistent. So this is for people who are conservative and want a bit bigger return around 10% right now. They can go and opt for this one. Please click the subscriber button, and if you have any doubts, kindly post it. Thank you so much for watching, and the NFO closes on 7th May. Thank you.